Good afternoon, everybody. Welcome to the session. My name is Joe, and I'll be a moderator this afternoon. Two bits of housekeeping. We'll get right into Chad's presentation. First and foremost, thank you all for attending these events. Keep coming with your feedback, comments, suggestions. It makes us better and better. Secondly, there is a chat box as you're watching this presentation to your right. You can send questions over during Chad's presentation, and time permitting, we're going to get to as many as we can at the end of his session. We're going for about 30 minutes or so. So with that said, Money Show is delighted to welcome Chad Freeman, CEO and managing member with MHP Investors. Since 2005, Mr. Freeman has been investing in real estate, generating a successful track record in both residential and commercial real estate, focusing over the past 5 years on mobile home parks. One of the founding members of MHP Investors, he has overseen all aspects, including onboarding, financing, operations, accounting, as well as taking the lead on scaling the business to new heights. Mr. Freeman, thank you so much for joining us. The floor is yours, sir.
All right. Thanks for the intro there. Appreciate it. Well, I'd like to say welcome to one of the best investment opportunities you're ever going to see. And it's not the world's most overvalued stock market, and coronavirus will help us out with it. But I'm excited to tell you all about it. And before I do that, I want to tell you a little story. So I know what it's like to not make a lot of money. My second job out of college in the industry I chose, because it was my second job because I'd just gotten furloughed after 9/11. And I traveled my butt off and worked very hard, and I was only making about $1,100 to $1,300 a month. And one of my favorite places to go was Rock Springs, Wyoming. And if you've been to Rock Springs, you probably think there's something wrong with me. But the reason I liked going there is because we stayed next to Super Walmart, and we get in about 10 o'clock at night, and I could go next door and get a rotisserie chicken for half price. So for about $2.99, I was able to eat 3 meals. So I absolutely loved it. And today in America, there's roughly 76 million Americans that make less than $30,000 a year. This is obviously driving a huge demand for affordable housing and rotisserie chicken. Now, there's a mobile home park in every single state in the US except for Hawaii. And there's over 20 million Americans living in mobile home parks. And I did a quick search on Wikipedia. I came up with, if you look at the metro areas of some of our top cities in the US, LA or New York, LA, Chicago, Houston, and Phoenix combined still doesn't quite add up to 20 million people. So that's how many people we got for a customer base. Now, as you can imagine, a lot of these parks, they're dangerous and run down and dilapidated due to poor management. Most of the operators with these mobile home parks today are mom and pop operators. And a lot of them aren't really great business people. In fact, some of them just aren't even really great people. So to me, the fact that you don't make a lot of money shouldn't mean that you have to raise your kids or be forced to live in a dangerous or dilapidated community. But unfortunately, that's what a lot of families are forced to do today. Now, typically, society, we look to government or philanthropy for help with this, but we found a way to improve communities and create a better world and make a great profit in the process. So in short, we make doing the right thing profitable. My name is Chad Freeman. I'm with MHP Investors Fund. And today, in the next 30 minutes or so, I'm going to show you why investing with us is going to be one of the best financial decisions you're ever going to make. Not only will you get a great return, but you can help change the lives of thousands of American families in the process, families who need the help right now. So what we do is very simple. We identify undervalued and neglected properties, and then we purchase them at a fair market price based on income and the current market cap rates. And then we bring them back to life with better infrastructure and management improvements, or better management and infrastructure improvements. One of our favorite improvements we like to brag about kind of makes us a green community as well. And we can do a case in point on our last property that we purchased. It had no sub-meters for the utilities. So the park or the community was in charge of paying all the water bills. So when we bought this place, we had over $7,000 a month in water bills. And by sub-metering and spending about $10,000, we dropped our bottom line for the water bills to zero. And we dropped the community water usage by over 2/3. Plus, we've found a bunch of leaks in the community. So we've saved maybe over 1 million gallons at this point, just with one community. And this also helps our tenants out who we care about, because when they have a water leak, it lets us alert them. And it's also the only fair way to do it, because it provides immediate responsibility for personal usage. We enjoy a lot of advantages with mobile home parks that people don't know about and they don't get to take part in with other sectors in real estate. Now, it's very important to understand our business model because I think a lot of people don't quite get this. But we're in the land acquisition and leasing business. We do not own homes. We don't rent homes. We just rent dirt to homeowners. And because we rent dirt to homeowners, we have a lower turnover and a higher quality tenant than other low-income options. In fact, our average tenant stays about 14 years. Now, we have a lower turnover because the name mobile home is a bit misleading. It is mobile, but in order to move a mobile home, you have to have a crew with a wide load and a semi truck. It takes permitting, and it's about a $6,000 to $8,000 process. So you can buy a used mobile home all day long for $20,000 to $40,000, depending on the market you're in. That's a nice home, but it doesn't make sense to move these and spend $8,000 on a $20,000 home. So what happens is residents turn over the home and they sell it and it stays within the property. It's very rare for a home to move out of our property. So picture what we do is just like a giant parking lot where nobody ever leaves. And we don't take any welfare. There's no Section 8. So we weren't hurt by coronavirus or evictions, moratoriums. Plus, we have a better and a cheaper product than our closest competitor, apartment complexes. If you look at the average 3-bedroom apartment now, rent across the US is about $1,300 a month. The average apartment or lot rent at a mobile home park is only $280 a month. And we have a better product because you get to own your own detached dwelling at a very affordable price. You don't have to share any walls, ceilings, or floors with your neighbors. You get to park in front of your own front door, and you can even have a yard. You can put in a garden if you want to. So if you look at the average single family, average stick-built price in the US, it's inflated, it's going up. It's been over $300,000 for years now. And this is a Google or Zillow home forecast. Towards the end of 2022, it's going to be at $355,000. You can buy a new mobile home out the door for $50,000 to $60,000 right now. So we have a huge competitive advantage, and we the only low-cost homeownership option there is really. And as we all know, inflation's hitting. It's driving prices higher everywhere, especially in the single-family home market. This is just showing record growth or record inflation. And one of the things that we love is we get to take advantage of inflation by adjusting, and we can pass on to the consumer. So as any income property or any income business, we can adjust for inflation. This should be on everybody's mind. The consumer price index for urban consumptions was just released at 6.2% a few weeks ago. That's the highest in over 30 years. So 6.2%, if you have $1 million sitting in your bank account, you're losing $62,000 every year through this tax. Whereas our property values, we can, like I said, pass this on to the consumer and we go up by that amount. So we can adjust up for inflation where it's a perfect hedge. As many people know, real estate and especially income properties are a fantastic hedge against inflation. Other advantages we enjoy is the entire sector is way undervalued. Now, I say this, the average lot rent in the US is $280 a month. If you just go back to 1960s, the average lot rent in the US was $50 a month. If you just adjust that, get a calculator out and adjust for inflation, you would arrive at somewhere close to $600 a month right now today as a fair market value. But as I said, a lot of the people operating these properties are not the best business people. So they just failed to even adjust for inflation over the years without even knowing that they're shooting themselves in the foot, taking value off of their own property and hurting themselves in the process. We also do fantastic during economic decline. We've found that the demand, especially with COVID, is just unbelievable right now. In fact, inflation has also hit in the mobile home park sector. We had about a 52% increase in home prices this year, and we have new homes on order. So I was worried about this, and I put a test ad. With our test ad in the market, we want to see about 30 responses in 10 days. Well, we got over 60 in 48 hours, and I turned it off. There was over 20 people wanting to come actually see our new homes. So we know we got the demand. There's also some big drivers in the economy pushing demand for us. Right now, there's 10,000 baby boomers retiring every single day. Now, if you think about the typical baby boomer retiring, we don't have a very wealthy nation when it comes to there's a large wealth gap. So typical baby boomer retirement doesn't have a large pension to fall back on. They don't have a big nest egg. A lot of them end up relying on the government, Social Security, and we get a lot of people downsizing and coming into the mobile home park option because of the price. We also have a growing wealth gap in the US. Since the Great Recession back in 2007, about half the jobs in the US created have paid $10 an hour or less. And then we have demand from the great reshuffling going on, which I'm sure everybody's probably heard about, but where everybody's flooding out of the cities, trying to get to the suburbs, get some social distance. And all the mobile home parks in the US are located in the suburbs and rural areas. There's not a single one I know of that's located in a major city within the limits. And I also want to take a second to talk about our residents, because I know we have a negative stigma. Trailer Park Boys is a funny show, but it's unfair representation. And when I think about our residents, it takes me back to my childhood, actually. And I'd go visit my great grandmother. She lived in a mobile home community. And when we'd go out there, she'd buy big bags of carrot cakes, these 5-pound bags of carrots, and she'd make the best carrot cakes for my brother and I. And looking back on this neighborhood, I knew that it was a little bit different, and I wasn't quite sure what was going on, but I could tell there was a good sense of community. People got together and cared about where they lived. And they took care of their stuff, and they were hard workers. They just didn't have a lot of money. And that's who we target. We target the single moms struggling to get by, low-income families looking for a good, affordable option for home ownership, and then lots of retired people. And if you've ever heard Warren Buffett talk about you want to get into a business that has a virtual moat around it, and what he means is large barriers to entry. Well, we have this for several reasons, and they're government guaranteed. One of them is the negative stigma that goes along with mobile home parks. This is actually helping us out because nobody wants a new mobile home park being built. And if you look over the last 20 years or so, governments essentially have not let any new mobile home parks be built. There's only about 10 per year being built right now. It's a huge process and a huge battle to get one built. And then we also have a high tax cost to the government. So the government doesn't like mobile home parks because it typically costs them more money through social obligations such as public schools than they collect in income. Mobile homes are titled as a vehicle and they're not actually considered real estate. So it's a very low tax basis for the government. So this is great for us. It means there's no new competition coming in. When I go buy a property and I want to turn it around, I don't have to worry about the world's best mobile home park being built right next door and putting me out of business. So not only are we undervalued, but we also have a decreasing supply. Now, when I said we're half of the fair market value in lot rent right now, it's actually important that we go and raise the market or rent up to a fair market value, because otherwise these properties are being repurposed because people can make more money with them elsewhere. So we never gouge our tenants. We do care about our people, but unless we go raise these rents and turn these properties around, they're going away. But again, for us as an operator, that's good. We have a decreasing supply and an undervalued market with a very large demand. And then there's very few big players in the industry. Right now, less than 10% of the mobile home parks in the US are institutionally owned. So soon we'll be in the top 100 players. You only have to be about 700 lots or so to be in the top 100. If you compare this, it's incredibly fragmented. If you look at apartment complexes, you have to be about 70,000 doors or so last time I checked to be in the top 100 owners. There are, however, a few very smart people in the industry that have taken notice. And one of them I love is Sam Zell. Now, to me, he's the best real estate investor of all time. He's also the top operator. He owns 160,000 lots. Warren Buffett is also big in the industry. He owns Clayton Homes, the largest manufacturer of mobile homes, who we love to order from. And then he's also the owner of 21st Century Mortgage, who we use to originate loans for people to get financed for mobile homes. And then I just heard that Mark Cuban is also the latest high-profile player to get into the mobile home park industry. He just bought a mobile home park in Texas. Why are there few big players in the industry? We think it's just because this is a relatively undiscovered and unsexy business until recently, but our cap rates and our returns have started to attract big money in the industry for the first time. We also have extremely low defaults. I think it may be the lowest default rate in the real estate industry. And banks absolutely love us. For the first time that I know of, last year, debt was being sold to operators of mobile home parks, agency debt and conduit debt, good debt, at a cheaper rate by about 40 basis points than Class A apartments. So there is big money coming into this industry now. If you look at last year in 2020, Blackstone purchased $550 million worth of mobile home parks. You also have the Carlyle Group is a big player in the industry now. And GIC, now that's the sovereign fund of the nation of Singapore is even getting into this. And even the Pennsylvania Public School Employee Retirement System is purchasing mobile home parks. You can see this happening in Colorado and Michigan today. If you go to Colorado, their quality assets have mostly all been bought up by institutional investors who turned them around and operated them like a legitimate business and raised the market rent up to where a fair market value is. And now in Denver metro area, the mobile home lot rents average over $700 every month. That might sound like a lot compared to 280, but if you look at the Denver metro area, that is a very affordable option. And there's been some consolidation taking place, and we anticipate that this will continue. There's been 2 billion plus transactions transpire over the last 5 years or so. This happened as Sun Communities bought Carefree, and then Brookfield bought RHP. And RHP, I believe, is Canada, so Canada is in this as well. And then GIC back to Singapore, they bought Yes Communities. There are approximately 44,000 mobile home parks in the US. And I think I mentioned only 10% are institutionally owned. Most of them are owned by mom and pop operators. Most of the mobile home parks were built in the 50s and 60s in the US. So they were typically, these baby boomer operators have inherited them from their parents or been a part of them since they were built. And one thing they all have in common is they're all getting older. And this is creating a time sensitive and critical window of opportunity for us today that we don't want to miss out on. We see this happening and we know that this window is going to close and we want to be there and we're in this position to purchase these properties. So there's big money coming in and putting pressure on this. And as they gobble these properties up, asset prices are going to soar. We have the experience and the knowledge to go in and revitalize these mobile home parks and define them and generate an amazing return in the process. But what we don't have is the capital to move fast enough to compete with the bigger players and the monies that's coming in today. And so that's why we're here today. So what we're doing is we're doing a raise up to $5 million. We're selling Class A preferred shares at $1,000 a piece. Minimum investment is $50,000. We wanted this to be small enough to fit into anybody's portfolio. And then we would like to reward the first people in. So year one, we're going to do a preferred return of 10%. Now, preferred return, it's cumulative. And that means that preferred means investors are getting paid before we do. But we're also putting our own money in this as investors as well. And then year two, we're going to go to 9% and then 8%. But on top of that, we're going to do a 50-50 split of excess income as our cash flows increase. And then this is where it gets really exciting for me. The value that we create has been tremendous. In fact, if you look at our properties we own today, we've created a 52% average per year annual increase in value. So we have a large opportunity on the back end of this to split the equity with our investors when we go turn around a property and down the road, we do either a cash out refinance, we can take that money tax-free, or we can sell the property or continue to pay down debt. But our exit strategy looks like this. We plan on holding these properties for approximately 5 to 10 year period and then reevaluate the industry, see where the credit markets are at, and then decide to sell or hold longer. And we do anticipate more industry consolidation. And now with this, cap rate compression is anticipated. We have not seen cap rate compression take place yet, but we have seen the cap rates drop and they've only followed interest rates down. So we don't see this happening yet, but we want to be in a spot down the road where we own a bunch of quality assets. So maybe we can be bought out, or as the cap rates do compress, we're going to sell these properties for a higher value than we'd ever be willing to pay for them ourselves. Now, it's a fantastic time to get into the mobile home park industry. It's relatively undiscovered, and your friends that you tell about it, they're not going to think it's fantastic, but they're going to wish they would have when they see the gains that you're going to have. There's a fantastic open window of opportunity right now with about 44,000 parks, and many of them, about 90% of them, are coming up turning over as mom and pop operators retire. On top of that, we've got a fantastic opportunity for asset price appreciation with an undervalued market. We're about half the rents of where we should be. You can also find a fantastic study about this. You don't have to take my word for it. There's a Duke economist named Charles Becker, I forgot to mention, and he did a great study on this, and he arrived at that conclusion that I said. Rents are about half of fair market value today with the mobile home park sector. And then we have 100 mobile parks, 100 parks every single year disappearing, a nice 6 to 8% cap rate range. And then there's affordable housing crisis happening in the US that we're helping solve privately with a growing population of a low earning workforce. And then we have 20 million baby boomers retiring over the next 10 years. So we're in a fantastic spot to get into this right now. And we're excited to grow our business. So right now it looks like we have about 10 minutes or so left for questions. So who's got the first question?
Thank you, Chad. Very interesting. Now you're saying here 44,000 parks, many still owned by mom and pop, ready to retire. Talk a little bit about how you find new acquisitions.
Okay, well, we have a spreadsheet of brokers that are specifically mobile home park brokers. And we just put pressure on our guys and then get off market deals. That's how we found our last couple of deals. Those are always the best deals, but we also have a funnel with the marketplace, and we found one off the mobile home park store as well, but they're few and far between. You really got to pick through them there. We like the deals that come from brokers that aren't listed or cold calling.
Sure, right. So Chris is asking, when you buy mom and pop parks and update them, is there a number of people that you're pricing out of their homes, or how? I'm not sure if I follow the question exactly, but he's basically saying if you buy mom and pop parks and update them, how many people, if you do it all, do you price out of their homes?
That's a good question. So we found that nobody likes a rent raise, of course, but we do it in manageable chunks. So if we're way below market rate when we purchase a park, we'd love to find those parks too that are 100, 200, or 150 below the current market rate of other parks. But we only raise $50 increments at a time, so we don't create a hardship for our tenants. And we've found that it doesn't create a hardship. There's an incredibly affordable option. And a lot of the people in there already own their own homes, and they know the market rent is higher than where it should be when we buy it anyway. So as long as we provide a value and people see that we're adding to their community, then we don't get a lot of pushback. But we haven't ever priced anybody out of the market that we know of.
Thank you for that. Where are most of your areas that you own? Is it down here in Florida, or where are your biggest areas of the U.S. where you're targeting?
We're all in Michigan right now, and we're going to expand down throughout the Midwest. We don't like Florida because it's too speculative, but we do sniff around Tallahassee market maybe, and we don't want hurricanes either, so we kind of tend to shy away from Florida.
Gotcha. Another question is, what is the average life cycle for a mobile home?
Just like any stick-built home, if you take care of it, it'll last. I read that about 30 to 50 years is on average, but they'll last just as long as any other home if you take care of it.
Another question, what state has the most mobile home parks?
That's Texas, by 5,176 parks, I think. And we'd love to get into the Texas market as long as it's not the oil market.
And so with that said, if you go back to somebody's asking about the deal terms one more time, could you just kind of refresh one more time? And folks, what I will say is get to MHP's virtual booth. It'll be live. It's live right now. It's live all day tomorrow. You can contact them through the virtual booth. Obviously, Chad and his team will get with you and get more granular. But if you want to talk about, okay, there we go, the fund returns. Can you go through that one more time? Because I think a couple people may have come in a little late.
Yeah, absolutely. So accredited investors only. This is a 506C. And like I said, it's a preferred return. So the investors are getting paid before we do. We're putting our own money into this as well. Minimum investment of $50,000. And then we're going to reward the first people in with a 10% return year one. And then year 2 and 3, it goes to 9 and 8. These are cumulative, but not compounding. And then we'll do a 50% split of excess income as our cash flow increases. And then as we create value and down the road, we can either refinance or sell the property. We're going to do a 50% split of that equity.
Thank you.
I'd like to say again, our average returns increase in value is 52% on our properties right now. And it's really easy to tell what these properties are valued at. Banks will tell you exactly how to do it too.
That 52% is how long of a time frame? Is that an annual return or that's a
Annual, yeah,
life of the, okay.
not including
Wow.
cash flow, we've increased our property values by 52% annually since we began.
Wow, interesting. This is a very interesting presentation. Talk about, do higher interest rates in the future, if that happens, do they affect you? Do they affect the people buying these homes at all? I mean, and I know it's a lower price point, but it's a lower income, of course, also. Does that affect you in any way?
Well, sure. So I like to think of, well, one of my quotes, I like Warren Buffett a lot. He says interest rates are to assets as gravity is to apples. So unless the industry, unless we have cap rate compression going on, the asset prices should follow the interest rates when the government does raise them. However, I'm not very worried about it because the government really can't raise interest rates very much or they're going to become insolvent. So they only have this little bit of raise. And the debt that we're getting issued right now is so quality that as long as we can keep a 3-point spread, that's probably the best answer. As long as we can keep a 3-point spread from our interest rate to our cap rate, then that gives us the buffer that we need to get the returns that we want.
Gotcha.
And then you mentioned interest rates for our customers. They are higher risk loans, and 21st Century does a great job with getting people qualified and figuring out who's going to pay and who's not. So we just rely on them, but depending on your credit score is what they come up with, like anything for interest rate and how much down.
Gotcha. So this fund, if somebody was to invest in the fund, the minimum is 50,000, obviously. Is there a lockup for those 3 years? Is that what, or is there a lockup on the funds that come in? Or like, for example, the 3-year, is it a 3-year preferred that they're staying in for the entire 3 years?
It's going to go, year one is 10%, and it goes down to 9 and then down to 8. But we're also anticipating, hopefully, getting more cash flow by then.
Yeah.
For that as well.
Exactly.
But we're just trying to, the first people in, we're trying to pay them more.
Gotcha. So this is obviously just open. Folks, this replay, I know a couple of folks have come in a little late to the presentation. This will be available up on moneyshow.com for 6 months after this presentation. Chad, just so you know, you get a copy of this as well. Okay. And Chad Freeman will be an expert on moneyshow.com. So again, folks, if you did come in late, you'll be able to watch the replay on moneyshow.com. Chad, what are your thoughts, like any outlier type events that could crimp what you're doing? Because obviously there's a huge opportunity here, and I didn't know anything about it until you spoke about it just now. And I think I'm in the same ballpark with a lot of folks. I mean, you know better than I do.
A lot of people don't understand it.
What's that?
A lot of people don't understand it. They think we're renting homes. We're not.
Yeah, and you said it's the dirt, right? It's not the homes. It's the land.
Big parking lot. We just provide utilities and dirt to homeowners.
I would imagine the quality of life for folks when you go in and do the community over or update it, right? I mean, you're adding a hell of a, besides giving somebody a family, a roof over their head, but other folks in the community, right? I mean, there's a quality of life.
Oh yeah.
That you're enhancing for them, right?
Yeah, it feels good too. You know, we quickly learned that you get to shape an entire community when you're doing this, and we want to make it good. You know, there's always some sort of clientele you don't want when we purchase one, but it's nice to go get rid of that. And then we had one lady that was afraid to go outside because the person living next to her, we got rid of him right away. She's not scared to go outside anymore, and we go in and they see improvements, and we promote a pride of ownership with our homeowners, and then they quickly see the community starting to turn around. So we get negative feedback, mostly from the people that are complaining they're getting kicked out, and then it kind of settles down and everybody starts to appreciate what we're doing.
Very interesting stuff. This has been a great presentation. Unfortunately, we're out of time, but folks, again, get to MHP, get to their virtual booth, and you can contact Chad and his team. through his virtual booth, which will be open through tomorrow evening. Again, this is day 2 of the event. We have another day tomorrow, and the virtual booth will be open all day till, I think, late tomorrow evening. So definitely get with Chad and his team. There were a couple of questions I guess we couldn't get to, but you can get with his team directly and he'd be happy to answer those. Chad, we appreciate you for the presentation, of course. To you and your team, we want to thank everybody who joined the session today and who continues to join these sessions. We appreciate you. Keep your comments and feedback, suggestions coming. And the last thing we will leave off with is we are back at a live event in Las Vegas, the 24th to the 26th of February. So if you feel moved enough, come see us. We have a great roster of speakers, and we have a great roster of companies presenting. There's a great, these events obviously give you great education, great insights, great tools, great investment opportunities. So come see us. Chad, thank you again, my friend.
You're welcome. Pleasure to be here.
Thank you. It was a great first one for you guys. And we want to wish you everybody happy holidays. Enjoy the rest of your day and the rest of your week. And we will talk to you again soon. Thanks again, Chad.
Thank you, Joe.
Be well, sir.